Income tax 2020. Charitable contributions if you take the standard deduction. Come in, relax with income tax 2020. Charitable contributions if you take the standard deduction. When thinking about the income tax equation, we're basically going to be here on the second line, although we're not going to have this on the Schedule 1, but it'll be right on the face of the 1040, remembering that we can break out our income tax equation to basically having two halves, the first half then being a modified income statement, the bottom half then being the calculation of the tax and application of then the payments and credits to get to the bottom line of the tax refund or the amount that is due. We're going to be focusing up top on the top half, basically the modified income statement, looking at what I would call the above the line deductions, which you can compare and contrast to the below the line deductions, which would be the greater of either the standard deduction or the itemized deduction. Remember that the name for the above the line deductions can be different. It can change. People might call them different types of things. They might call them adjustments to income because they're going to be adjustments to the subtotal of adjusted gross income, which is often going to be the number that will be used for phase out type of limitations. You can call them adjustments for adjusted gross income. Sometimes you might hear them called Schedule 1 adjustments, and that would be an appropriate name as they are normally on the Schedule 1, except for this one happens to be on the first page of the 1040. They kind of put one more item on the first page of the 1040, but it's basically an adjustment to income because it will be affecting the adjusted gross income number. So if we look at the 1040, then we're focusing down here on line 10, and normally we've been focusing in this section on the items that would then be coming from Schedule 1. Now I know this is kind of blurry on this Form 1040. We will take a look at an example of it in a future presentation when we will zoom in on it a little bit more clearly and see how the data input will work for it. But normally we have it attached to a Schedule 1 with many of these types of above the line deductions. But this one has its own little spot here on the first page of the 1040 for the charitable contributions if you take the standard deduction, and then it'll be affecting, of course, the adjusted gross income in a similar fashion, and it'll be contributed to line 10C here. So we'll see that in more detail in a future presentation with regards to the forms, and now we'll just discuss about what it is and what's the cap on it. So charitable contributions, if you take the standard deduction, as the name implies, then normally the charitable contributions are itemized deductions. So meaning you would need to be able to itemize. We'll talk about itemizing later, but in other words, you would have to have itemized deductions greater than the standard deductions in order for them to be beneficial for somebody to be taking. And that means that if you did not itemize, you typically wouldn't get the benefit of donation to the charity like you would if you were itemizing. Also, 2 years ago, they adjusted some of the tax law to simplify it, and part of the simplification would lead more people to take the standard deduction, which probably was good in that it would simplify things. But that means that less people would be itemizing, and again, less people would be getting an advantage from charitable contributions. So we have this then that's on the first page, an above the line type of deduction, which is not affected by whether or not you're going to be itemizing or not. Obviously, it's going to be much more severely limited, however, and the limit is a $300 for single and married filing joint, meaning it's basically capped at $300 whether single or married filing joint. I'm not sure why they didn't, kind of double it for the married filing joint, but that's what it is. So the $300 can deduct even if they do not itemize. So even if you're not itemizing or not using the Schedule A, not having the itemized deductions because your standard deductions are higher, you could still take up to the $300 charitable contribution on the first page of the 1040, which would be basically an above the line deduction. That's kind of the point, of course, of the deduction. You can take it even if you don't itemize. Deductions under the CARES Act must be in cash. So it's got to be a cash contribution, cash typically including like checks or possibly credit cards, but not something like donated property. So we're talking basically a cash donation. And of course, it must be given to a 501c3 public charity. It should be a charitable organization. You want to make sure that you're given to a legitimate organization in any case, and it needs to be a legitimate organization in order to, or legitimate in terms of a 501c3. It doesn't mean giving to other organizations or other people or whatnot isn't good. That's good too. But to be deducted for under the CARES Act for the charitable contributions, got to give it to a qualified organization under the law, which would be a 501c3 public charity.